For example, let's say that your income is 30,000, looking at these gross income examples here, and you want to keep your housing costs below 30%. That's going to look a lot different than whether you want to keep your housing costs below 50%. In that example, we're talking about a difference or range from $750 all the way up to $1,250 just by making the choice of where you want to keep your housing costs. Now, historically, the recommendation from the federal government has been to keep your debt to income or your housing costs or rent below 30%. However, as we see here, that is getting increasingly difficult. In the 25 most expensive metros, you'll have to have a household income over $100,000 just to meet that metric. And it's not much better in the 25 least expensive metros. In fact, the national average, if you want to keep your housing costs below 30% of gross income, still means you have to bring in an income of about $114,000 according to this study. Unfortunately, the cost for rent isn't much better. In fact, the median cost for a one bedroom in 10 major cities is over $2,300, and overall median rent is increasing and is about $1,500 for a one bedroom across the United States. But let's get back to the payday routine. It's a 4-step system. Choose your budget system, and number 1 is to make that choice. Set up your accounts, automate if possible. I'll talk a little bit about how you can save money by using a credit union, or you can have a flat fee if there are fees associated with your banking account. I do this electronically. Number 3, then to transfer the income on the first of the month. Then number 4, before the end of each month, review the lessons learned that you have that month. Especially if you have a partner, you can discuss lessons learned. As you get used to these systems, you can start to do that quarterly, yearly, and then every 3 to 5 years as you begin to automate. Of course, I want to recognize that everyone's experience is different. In fact, as we see here from the US federal government, the top 1% of salaries by age range, going from age 20, you can break into the top 10% with an income of about $64,000. These figures are from 2022 and were published by the US federal government. You can find everything that I talk about in this video linked in the video description below. In the middle here, we see average salaries as of 2022, with our peak earning years typically occurring for the average American around age 35 to 54. And overall, the average American across the nation earns about $80,000, which is up 4% since 2022. But as we see in this final map here, those figures look a lot different across the nation, where average salaries range significantly based on job, where you're located, and region. As we see here, everyone's experience is different. In fact, the average man as of 2022 earned about $80,000 a year, and he had a median salary of about $60,000 according to the US Census Bureau. Here's a breakdown of household income by age, and overall, Americans make about $80,000 median household income. And of course, millionaire is a status that many of us want to reach, and the average millionaire has 7 income streams. Today, I'm focusing on earned income and business profits. So once again, you want to choose your budget system, set up your accounts, automate if possible, or manually transfer the income on the first of a month, and review the lessons learned. My favorite budgeting system for my personal accounts is pretty simple and straightforward. It's a 50-30-20 budget. I've talked about this when I wrote my book, Debt Free or Die Trying, in 2016 and 2020. And that's how I personally paid off $30,000 in debt using this 50-30-20 system. Now that's 50% for needs. People seem to have a lot of difficulty in determining the difference between needs and wants. So here's a simple graphic from the US federal government. I think it's money.gov, where they talk about here are some example categories that you can put under your needs and some example categories you can put under wants. 20% for savings or investing or paying off debt. It's pretty straightforward. I use that 20% category to pay off my $30,000 in debt. If you want more information, that book is linked in the video description below. This is very simple. As far as automating this between 2 accounts, I just have a simple personal checking and savings account, and this is what I use for my personal budget. Again, choose your system, automate your accounts, transfer on the first, review on the 30 or the 31st or the end of the month, rinse and repeat. As you might expect, things get slightly more complicated for my business account, where I've set up 5 accounts. I actually based this on the book Profit First. The author is available on Instagram. I'll link that for you in the video description below. He's written 8 books. For the purpose of this video, I'm going to focus on Profit First. In Profit First, the author talks about the 5 accounts that you need to have a successful business and put profit first so you can have a business that actually makes money. The author says here, one time you set up 5 accounts: your income, profit, owner's comp, basically what you're going to pay yourself, tax, and operating expenses. Every day you review these accounts. I personally don't review my accounts every day. I do so maybe monthly or quarterly. And then you transfer them. He recommends bi-monthly. I do on the first of the month, but that's mostly to ease my payment of bills through the end of the month. To be perfectly honest, I don't take owner's comp out of my business because I have a full-time job, so I only take profit. So there's no reason for me to have to review so quarterly. I actually take my profit distribution every month, and then annually I work with my CPA for allocating my taxes, and I'll show you what that looks like since he recommends that right here. Right out of the book, Profit First, he has this figure that breaks down your real revenue budget and then how to break that down. I'm going to call real revenue income for the purposes of this exercise. And let's say you have a business that makes between $250,000 and $500,000, or column B. Here's what that'll look like. And here's that Profit First breakdown. You set up 5 accounts shown here at the top. 100% comes directly into your real revenue account, and then you can automate or make manual transfers. He recommends on the 1st and the 15th. I personally do so on the 1st because it's easier for me to pay my bills. But account number 1, 10% for profit. Account number 2, 35% for owner's pay. Account number 3, 15% for taxes. And finally, account number 4, 40% for operating expenses. Again, 2 simple systems that you can follow, one for personal, one for business. I'll review those one more time. Choose your budget system, set up your accounts, transfer income on the 1st of the month or the 1st and the 15th is his recommendation, and review, which we both agree on, for lessons learned.